Okay, we are in the SEC website. We've studied about this website, like in chapter 1. This is the financial U.S. Financial watchdog of the United States. And let's click financial company filings. And let's have a look at the Delta's case. Delta's ticker is DAL. And then let's open their annual report. Here is the one. Click the filing. And then interactive data. And then where was it? You can see cash and cash equivalents in their balance sheet. We can see that the cash and cash equivalents is here under the current assets. $8 billion they have as cash at the end of the last year. But we can see that where is the other cash? Do they have or not? Oh, we have here cash restricted for airport construction, right? If you click here, then you can see the accounting standard definition or company's own definitions of it. Amount of cash and cash equivalents restricted as to withdrawal or usage, classified as non-current, right? They are planning, the Delta is planning to use the cash for airport construction. How much? 1.5 billion. Much later than 1 year, right? So we can say that it's not true if you say cash is always current assets. All right, that's the end of this chapter, honestly, but I want to share with you, have a look at the statement of cash flow. Again, we've mostly studied financial statements such as balance sheet and statement of operations or income statement. And we've seen some of the statement of equity, owner's equity or stakeholders' equity. But we didn't pay much attention on this part, statement of cash flow. Because we are studying cash, I think it'll be interesting to have a look at it. Okay, then what is that? You can find from this statement of cash flow 3 different sections. One is cash flow from operating activities, cash flow from cash flow from investing activities. You see that? They don't have the title, but these are cash flow from investing activities. You can see that, right? Investing activities. And the last part is cash flow from financing activities. Okay, then cash flow from operating activities is there, this section shows Delta's cash inflows and outflows from its own normal business transactions. Okay, and then the second part, cash flow from investing activities, shows you Delta's cash inflows and outflows because of their investing, such as investment in their buildings, capital expenditure, or short-term and long-term investments. Okay? And cash flow from financing activities shows you their financing, like debt finance, equity finance, financing activities, inflows and outflows, right? They need to sometimes return back to the bond investors, right? And the like. Let's have a look at one by one. Just for example, your cash balance, cash inflow can be different from your net income. This is income statement. Their net income is, last year, year 2020 was the worst year maybe in the history of Delta because of the COVID, right? And we can see that they made loss of how much? Net loss of $12 billion. Does that mean that they lost cash of $4 billion? Nope, that's not true. Again, you see the net loss of $12 billion, right? But again, we are using accruals accounting. As a result, it does not mean Delta lost $12 million. For example, in this case, in the year of 2020, Delta's real cash usage for their operating activities, their normal business, was $3.7 billion, which is much lower than their net loss. Why do they have the two differences? For again, based on the accruals accounting principle, we have a lot of non-cash related figures being incorporated into the net income, right? For example, depreciation and amortization. Amortization we didn't study it, but depreciation we studied, right? The loss of value of your equipment. Like you purchase a laptop at $1,000. 2 years later, if you try to sell it at like Craigslist or eBay, then most likely you will get not $1,000, right? Like $200 only. In such a case, you've lost the value of $800 for your laptop, but it's not. You're paying out cash, right? So the depreciation expense should be added back to your net income and the like. Then you have much lower cash usage outflow than your net income. Okay. What else? In CFI cash flow in investing activities, we can see a lot of activities such as flight equipment. They have purchased some airplane-related equipment of $896 million. This is negative, right? So they paid out. Ground properties, similar. Right? Proceeds from sales leaseback transactions. Typically, airline companies buy, for example, from Boeing, the aircrafts, and then sell it to, for example, banks like City Capital. And then they lease it back from City Capital. So when they sell, they receive money from City Capital, for example, which is $465. Okay, purchase of equity investments. It is possible that companies buy some other companies' shares. How much? $2 billion amount. Likewise, you can sell the equity investments. Purchase of short-term investment. Likewise, other companies' bonds. You can buy and sell. Okay. And then you can see that they have invested, Delta has invested $9 billion, right? Again, one of the component of it is like $2 billion for flight equipment and ground properties. They are their capital expenditure. Without any capital expenditure, Delta or any companies, most likely the manufacturing companies, does not have future, right? Without investment being made, they will be at the risk of losing their competitive edge in the near future, right? So making good investments is pretty important. Delta has made it about $9 billion last year. Okay, what about then cash flow from financing activities? The liability and equity. How much cash did they raise from their investors from their short-term investors and long-term investors, right? And from their shareholders. It appears that they didn't issue any shares, but they repurchased back from the shareholders. When companies repurchase the shares, then there are fewer number of outstanding shares in the market. As a result, when the quantity is decreasing, price goes up. As a result, stock price goes up. Right? That's one of the ways of companies paying back to the stock investors, together with cash dividend. Okay. So overall, they've raised like $19 billion of money from net from the shareholders and debt holders, right? So considering three of CFF financing activities, CFI investing activities, and operating activities, their cash overall change balance change is like $6 billion. Their beginning balance was $3 billion, so 6 plus 3 is $10 billion. Okay. So this is a topic that you will study in chapter 17, but pretty important, right? Okay, that's the end of chapter 8, and in the next video we will study chapter 9. See you there.